and welcome to Project Titan Wall Street Analysis, Season 2, Episode 10. I am Saketh and I will be your host for today. We will discuss what has occurred since the last podcast episode. Our source for this podcast is the Wall Street Journal. Without any further ado, let's dive right in. First, let's talk about how the index got close to records on June 27th after the markets closed. The S&P 500 and Nasdaq Composite closed just below their all-time highs, reflecting a remarkable recovery from their stock decline in April. The Nasdaq increased by 1%, achieving its highest finish since December 16th. The technology-heavy index has risen 32% from its low point on April 8th, following a significant 21% drop after President Donald Trump announced sweeping tariffs on Liberation Day. The S&P 500 finished 0.8% higher, falling less than 0.1% short of its peak, and the Dow Jones Industrial Average rose by approximately 404 points, or 0.9%. Analysts noted that enthusiasm for technology-driven growth is outweighing concerns about volatile geopolitical situations and high valuations. Tech stocks, which were impacted during the market's decline related to tariffs, have rebounded as investors became more optimistic about avoiding a debilitating trade war. This renewed interest also includes excitement for companies involved in artificial intelligence. Recent announcements of significant investments in AI from firms like Amazon and Meta Platforms have led some analysts to anticipate strong second quarter earnings reports for these companies. It's how companies are trying to compete with Google's search engine. A new wave of startups is betting on the rapid decline of traditional Google search. At least a dozen companies are investing millions of dollars into developing software designed to help brands adapt to a future where customers no longer browse the web, but instead rely on AI chatbots like ChatGPT, Perplexity, and DeepSeek to gather information for them. These startups are developing tools to help businesses understand how AI chatbots collect information and learn to guide users towards specific brands, enabling them to appear in AI-driven searches. This represents a new chapter in search engine optimization for the internet. Companies have been spending the last 10 to 20 years optimizing their websites for the traditional 10 blue links version of Google, said Andrew Yang, co-founder of Athena, one of the startups. That version of Google is changing very quickly and it's changing for good, he added. Businesses of all sizes are racing to understand how generative AI tools process their own content. This demand has been beneficial for new startups, which report a rapid increase in customer interest. It signals how AI is transforming search and how companies are striving to stay ahead of these changes. Yan left Google's search team earlier this year after realizing that traditional search is not the future. Athena launched last month with $2.2 million in funding from startup accelerator Y Combinator and other venture capital firms. Athena's software examines various AI models to determine how they find brand-related information. It can track differences in how these models discuss specific brands and recommend ways to optimize web content for AI. Next, let's talk about Nvidia achieving a $4 trillion market cap. Nvidia has made history by becoming the first company ever to reach a market value of 4 trillion US dollars, surpassing its competitors Apple and Microsoft during trading on the tech-heavy Nasdaq exchange. The company's success can be attributed to the rise of generative AI, or artificial intelligence. This groundbreaking technology is set to transform business practices and reshape how humans interact with technology worldwide. Based in Santa Clara, California, Nvidia designs graphic processing units, or GPUs, which are crucial for powering the AI industry. This surge in Nvidia's stock price marks a significant milestone, occurring just 2 years after the company achieved a closing value of $1 trillion for the first time. Currently, Nvidia shares are closed near $162.88, bringing its total market value close to $4 trillion. Remarkably, Nvidia is now valued as much as the combined worth of the 214 smallest companies in the S&P 500, according to Dow Jones market data. Although Apple and Microsoft have approached the 4 trillion mark also, Apple has a market cap of $3.915 trillion in late 2024, while Microsoft was valued at 3.708 trillion last week. They have not yet reached the milestone. Next is how the Federal Reserve continues to be split about how to deal with Trump's tariff threats. A brewing debate within the Federal Reserve regarding how to address the risks associated with President Trump's tariffs threatens to disrupt a period of relative unity among officials. They may soon find themselves divided over whether the new cost increases warrant keeping interest rates higher. In recent weeks, Federal Reserve Chair Jerome Powell has suggested that the central bank might have a lower threshold for cutting rates than what seemed possible this spring. At that time, larger tariff increases were expected to push up prices while weakening the economy. A rate cut isn't anticipated this month. Instead, Powell has outlined a middle ground where milder than expected price readings or softer employment data could justify cuts by the end of the summer, representing a lower benchmark than the more obvious signs of economic deterioration that the Fed might have required when larger tariff hikes led to forecasts of significantly higher inflation. Trump's announcement of larger than expected tariff increases in April disrupted the Fed's plans to resume rate cuts this year, raising concerns about a stagflation scenario in which economic growth weakens while prices continue to rise. The next topic will be about Merck's deal for acquiring Verona Pharma. Merck and Co. has announced a $10 billion deal to acquire Verona Pharma, which includes the chronic obstructive pulmonary disease (COPD) treaty Altuviiio. This acquisition comes as Merck prepares for the 2028 loss of patent exclusivity for its leading cancer drug, Keytruda. CEO Rob David said, "We're now well on our way towards transitioning to a portfolio with a far more diversified set of full future growth drivers. Merck will buy Verona for $107 per American Depository share, reflecting a 23% premium over its closing price of $86.86 last Tuesday, with the deal expected to close by the end of the year. Altuviiio, approved by the U.S. Food and Drug Administration last year for COPD maintenance treatment, enhanced Merck's cardiopulmonary pipeline, which also includes Winrevair. Merck noted that the COPD therapy market, currently worth about $17 billion annually, is projected to reach about $27 billion by 2032, as stated by Jenny Oosthuizen, president of Merck's U.S. Human Health business. Next, we will discuss how Ferrero, the creator of candies like Ferrero Rocher, will acquire W.K. Kellogg. The Italian candy maker, known for Ferrero Rocher and Nutella, is nearing a deal worth approximately $3 billion to acquire the breakfast cereal conglomerate W.K. Kellogg, according to sources familiar with the situation. Ferrero, a family-owned company, may finalize the agreement as soon as this week, unless there are any last-minute issues in negotiations. This deal would merge two renowned consumer food companies from both sides of the Atlantic. W.K. Kellogg is the brand behind popular cereals such as Fruit Loops, Frosted Flakes, and Rice Krispies. The company has a market value of around $1.5 billion and over 500 million in debt. The origins of cornflakes cereal date back to 1894 when the company's founder, Will Keith Kellogg, supposedly created it by accident. This invention led to the establishment of the business in the early 20th century and revolutionized the breakfast food industry. Now, I will discuss how Bitcoin has hit its peak. Bitcoin reached a record high of $113,853.97 this Thursday, coinciding with gains in the Nasdaq Composite Index and Nvidia. This surge occurred just after breaking its previous record, which they set in May. Following President Trump's election victory in November, Bitcoin surpassed $100,000 for the first time. Still, its growth slowed as tariff-induced volatility affected markets, and investors awaited pro-crypto policies. Past Bitcoin rallies have been triggered by major events, such as the launch of Bitcoin futures in 2017 and Coinbase's stock market debut in 2021. This time, investors benefit from a supportive ally in the White House. Trump has directed a creation of a strategic reserve for government Bitcoin holdings and plans to sign legislation establishing a regulatory framework for stablecoin. The Senate passed such a bill last month. Now, I will discuss how Kraft Heinz is planning its own break. Kraft Heinz is planning to split itself up after nearly a decade after its controversial merger, led by Warren Buffett and Brazilian private equity firm 3G Capital Partners. The company intends to spin off a substantial part of its grocery business, including many Kraft products, into a new entity potentially valued at $20 billion. This would leave a company focused on sauces and spreads, such as Heinz ketchup and Grey Poupon mustard. Kraft Heinz is prioritizing faster-growing products like hot sauces and dressings, which better match consumer preferences compared to processed meat and cheeses. The goal is for the two separate units to exceed Kraft Heinz's current market value of about $31 billion. A split could be finalized soon, but the board has yet to approve the final decision. The last topic will be about how ETFs are becoming more concentrated. Peter Lynch, former portfolio manager of Fidelity Magellan Fund, warns against diversification or clustering a portfolio with too many investments. Instead, many investors should be cautious of diversification, which concentrates risks by investing in a limited number of stocks. This trend is evident in exchange-traded funds (ETFs) that often track only a few or even one single stock, making them riskier than traditional index funds that cover a broader market. According to Daniel Osodiroff from Morningstar, in 1998, 85% of stock index funds were capitalization weighted. Still, by the end of 2024, only 40% were, which is a 45% drop. The median index fund held 503 stocks in 1998, while by May 2025, this dropped to just 123. Newer investments often take on more risks than investors realize, paradoxically leading individuals to concentrate their portfolios on a few volatile stocks while worrying about the S&P 500's resilience on large tech companies. Thank you for listening to this episode of Project Titan Wall Street Analysis. I'll see you later with Ananya.